Not everybody, by the way, has been a runaway winner in this AI race.
No.
You got sick and tired of holding Adobe.
Yes,
as
true.
Some have said they're just not in the same league with some of these other stocks that have done remarkably well relative to the performance here. Adobe's coming off its worst week since June 4th. That's after earnings. It was last week. You sold it.
Before earnings.
Why?
Right. Well, we sold it because, unfortunately, they're having trouble delivering. They're having trouble in their major business, Photoshop, where people use Adobe tools to create content that they couldn't do otherwise.
Well, now you can do otherwise.
And now
that's sort of my point.
And yeah, and unfortunately, this news from Meta and it's Google, and it's going to be other places that people advertise, such as Amazon, the clients are going to be able to make their own content, and Adobe has not moved fast enough with their own tools to keep their business.
Why? So Carrie sold it to you.
She did.
Yes.
She did.
So you bought more.
Yeah, I did. Now, this is a position I've been adding to over the years. I'm cautious in saying this, but I disagree with you quite strongly when you say they haven't delivered. Because, at least as the earnings go, they beat on the top line, they beat on the bottom line, they raised guidance. And you and I were speaking about this before the show.
Have they delivered deep? Can we show that chart again, please?
Can I do it to myself instead of you doing it?
I'm just going to have the chart up there. So when you talk about them delivering, I want you to see what they've delivered to you,
well,
the shareholder.
I was going to do it to myself.
Not do the intraday, please. Let's go to, I don't know, a year, 1 year.
Down 23%.
Year to date, 1 year.
Down 23%, 1 year. I know, and I've been adding to it, building to it over the year. Now, look, Carrie and I discussed this, and we have different investing styles. She is a growth investor. She is not going to look at a stock like this and say, yeah, I want in. She's going to say, I want out. I am much more of a value-oriented guy. Again, when I was talking about delivering, I was talking about the operational results. Absolutely. The share price has been terrible. I understand why you got out, and it seems to, for whatever reason, stink the most when it beats on earnings. All that said, earnings estimates are starting to go up. They bought back shares to the tune of 5% of share count decline over a year. So it's not just me. They believe in what they're doing. The competitive threat that is out there, they are meeting it. That's why earnings estimates are going up. Now, Scott, you and I talk about this a lot.
What does that mean? They're meeting it.
You see it in the fact that they beat on the top line, they beat on the bottom line, they raised guidance, and earnings estimates are starting to go up. So the rub against this stock has been there's competitive threats out there. Well, they are delivering on the operational results, not on the share price. They can't control the share price. The share price, though, is a matter of time. You can only outperform, and they've outperformed consistently quarter after quarter. The share price inevitably follows, and if it doesn't, they keep buying back shares, shrinking the share count. It may take a little time, but look, I've built it over the last year. I'm going to stick with it. You know this is how I invest, right? And this doesn't matter whether it's Cisco, doesn't matter whether it's Citi. I build the position and then let it run when the market finally realizes.
They are at risk in fiscal year 25, single-digit revenue growth. The last time they had single-digit revenue growth was 2014. They have to somehow revive that revenue growth. I've had concerns. You and I talked about this about 9 months ago. Yeah. We had gotten out of Adobe. We felt that there were challenges related to AI, what it would do to the product. Look, there's a massive earthquake coming in the technology sector, and it's coming from OpenAI. And I don't know ultimately when OpenAI IPOs, if there's going to be enough room for capital to be loved in all the places that it's being loved right now. I actually think it'll be detrimental to some of the Mag 7 and to some of the names we're talking about here. Capital's going away from there. Not sure which ones in the Mag 7 are going to be feeling that challenge, but they will feel the challenge.
Let's talk about some other areas of the market that need to be discussed. They're making news today. Crude is lower after spiking on Friday. Plays into some of the moves that Joe has made. You bought the iShares Israel ETF.
Yes.
That's one move, but Enbridge and Suncor, how does that play into the totality of the story?
Okay, first of all, with the Israeli ETF, I've talked over the last several months about wanting to own it. It is near an all-time high, which it made on June 9th. Israel is the second leading exporter of technology. When we are talking about this innovation surrounding artificial intelligence, advancing to generative AI, Israel is right there alongside the United States, whether it's Checkpoint or CyberArk. So on Friday, you had the significant pullback. I believe that geopolitical pullback was an opportunity. You're getting exposure to 34% technology, 30% financial sector, another one of my favorite sectors. I wanted to step in there. As it relates to energy, everyone is trying to predict the price of oil. There's very few people that I know that can do it successfully. You had one gentleman on Closing Bell, who you and I both know very well, Mark Fisher.
Yeah, and even he's having a tough time.
And he's having a tough time doing it. Okay, so I'm going to defer to Mark. What I'm going to tell you is the opportunity surrounding investing is thinking about where supply will shift if it ultimately has to shift. And so far, year to date, it's interesting because the Canadian E&Ps are actually outproducing all of its developed international E&Ps, whether it's Europe, whether it's the United States, whether it's Australia. So I bought two names. I bought Suncor and I bought Enbridge. Enbridge is the pipeline that is delivering the crude oil down to the United States. Suncor, obviously, is the EP. There's this insatiable need on the part of U.S. refiners for Canadian oil, and you have a 10% tariff on Canadian oil. Well, guess what? The Canadian oil companies are not eating the tariff. It is the U.S. refiner that actually is eating the tariff, and you're seeing the margin compression there. So if you want to manage your risk surrounding this, you could potentially buy some puts in some of the refiners, because I think an oil price in the mid-70s is challenging for the refiners. But the shift in supply, if it has to happen, Canada is the actual place where you'll be able to deliver the excess crude oil if the market needs it. And the performance so far there is year to date. And the earnings estimates in 25 in the U.S. collectively, energy companies have an earnings estimate in which they contract nearly 12%. The earnings estimate on Canadian oil companies, they only contract 20 basis points. So I think it's a great opportunity to think about, okay, I'm getting exposure to two names in Canada that have outperformance relative to its geographic energy peers, and also could be a source of excess supply.
Okay. We have retail sales tomorrow. Something to note, especially ahead of the Fed decision. You sold Casey's General.
I did. Listen, I have to give a hat tip to Ralph Coutant in our office. He's the analyst who brought this to me. The stock has been beyond a home run. And this is just one of those cases. I said it's a stock picker's market. You have to be willing to sell high if you're going to buy low. If you're going to buy some Adobe, you know, you got to fund it somewhere. But it's just been a heroic stock. Now trades at a nice multiple. It probably goes higher. I'm not saying this is a terrible stock. Not saying that at all. I just needed funds for Adobe.